So, congratulations, everybody who's holding AirCanada. We had a good quarter. Stock today is up about almost 14%. So, we're finally seeing some movement in AirCanada. So, in this video, we're going to talk about why we're seeing that movement, if this is going to continue onto the future. We're going to quickly go over my curated financials, simplified financials that I usually put together for you guys. Then we're going to go in a little more depth. And then we're going to talk about the conference call. So if you haven't heard, already, of course, the reason that we're seeing the stock kind of do what it does is we're going to see some kind of anti-dilution. We're going to see some share buybacks. Yeah, what all the big tech is doing. Here we see, the 2020 drop that we had when we were $50 plus a share, and we can see that the dilution that occurred at this time, right? Nothing since then. Now we're going to be going back in the other direction. We're going to be doing, we're not going to be offsetting all of that, but we're going to get into this into the video, why this is so good, and what it means for the stock going forward. So this is Q3 2024. It was a good quarter. Passenger revenue was down year over year, about 4%. But if you look at it in the last 4 quarters, definitely beat all those quarters, $5.6 million. Cargo revenue is kind of the star show here, 18% increase year over year. And as we can see, the last 4 quarters, it's done better than anything other. It's pretty similar, down 6% year over year. And that's where we're seeing total revenue of $6.1 billion. Sorry if I said million up here. $6.1 billion. Again, blew out all the last 4 quarters, but it was down about 4% a year over year. Net income was over $2 billion. Their adjusted net income is actually less than that. We're going to get into what more realistically it is. But regardless, we'll stick with the $2 billion for now. It's up 60. That's a huge increase, 63% year over year, and completely dwarfs the last 4 quarters. EPS, again, was just a huge blowout, $5.38, up 80% year over year. But adjusted, which we're going to talk about in a little bit here, was about $2.57, which was down year over year, but still blew out the last 4 quarters. Cash is relatively the same. It's up 1% year over year, about $8.3 billion. So it's going to be interesting to see going forward what happens with that cash pile, or how exactly they're going to be buying back the shares. We'll see. So getting into a little bit more depth here in terms of the income statement, we went through these numbers already. Total revenue $6.1 billion versus $6.344 billion a year ago. Now, in terms of their operating expenses, there wasn't too much interesting. Of course, wages, salaries, and other benefits went up slightly, and we're going to be talking a little bit more about some of the adjustments that are going to be happening next quarter in respect to the pilot agreement, because we didn't talk about that. That was actually ratified. The pilots got roughly 40% increase. That is going to affect some of their financials, but we'll talk about that in a little bit. Operating expenses here over $5 billion over 4.9. So our operating income was over, they said $1 billion, but it was 1.04 billion versus $1.4 billion a year ago. In terms of a non-operating expense here, 143 million versus 98 million a year ago. You might not be able to see the bottom there. So up a little bit more there. So that gave us a we would have been going down into quite a bit less, because income before income taxes was 897 million versus 1.3 billion a year ago. However, they did recognize a one-time income tax recovery of $1.1 billion. So that was the difference that made the difference. You see, last year it was negative 67 million. So that's where we came in and we saw that net income rise. So it's not really, right? So that gave us the diluted earnings per share of $5.38. Still fantastic to see this growth going on, to see buybacks occurring. But you got to look into some of the details. Into some of the details there to know a little bit more about what's going on. Start in terms of the balance sheet, nothing too interesting. Like I said, we got about $8.3 billion in cash versus $8.5 billion a year ago. Also really nice when we're looking in their liabilities here. Their liabilities, they've been paying down that debt. So it was about 12 point something billion a year ago. Actually, this is not a year ago. This is in the 4th quarter of last year. So I'm not too sure why they actually did that. If you guys actually know, I'd love for you to give me some insight, because I was looking at these numbers. I'm like, no, that's not year over year. That's Q4, the fourth quarter of 2023. So anyway, we're in the third quarter now. So yeah, nice to see that debt come down, and coming down and coming down, right? In terms of the statement of cash flow, I don't usually include this, but it was interesting to see a little bit here. Of course, we minused out that deferred income tax because it's not really a cash item. Another difference here we saw was a little bit more significant of a deduction there. So those kind of evened out each other out a little bit. But anyway, net cash flow. So operating cash flow, 737. Well, you probably can't see that. 737 million versus 408. So improvement there. In terms of investing, they're investing a little bit more, 140 million versus 71 a year ago. So you guys can look at that a little bit more if you want. Now, conference call. There wasn't too much on the conference call here. Of course, the share buyback was the big thing here. And I was a little bit surprised by this. Up to 10% they're going to be buying back, and they're going to be initiating this on the 5th. So it's kind of interesting to see actually the stock up like 13%. It's almost directly correlating to that. But yeah, we saw during the COVID time, we saw that dilution that was occurring, and it wasn't great. We saw debt come on, and it's really nice. They've got a lot more fiscally responsible, and it's good to see going on. Another positive here to think of is the possible strike. It didn't turn out to be an actual strike. This was going on for a long time. Did have an impact on the earnings. So I believe they're saying there's going to be another negotiation coming up soon with the stewardess, I believe is who it is. I wasn't even actually aware of that until this earning call. But it's not going to be like this one, right? So it did have an impact. So I can see going forward that we're definitely going to see earnings kind of continue to do a little bit better, and I sure hope so. Talking about that contract a little bit more, how is it going to affect? Okay, well, there's going to be a cash payout for the new contract, and it's going to show up in terms of a working capital draw, and that's going to be in Q4. So next quarter, there's going to be some major hits next quarter, so be aware of that if you're following the stock. This also has an effect to the pension as well. So it's going to be about a $500 million charge there as well. I'm assuming that's going to be in working capital as well, so you look for it there, see where it is in the financials. About 500 million. So I'm not too sure what else it will be in terms of that. But the deal's worth quite a bit. It's worth something like billion something, 1 point something billion. I don't know the full details. But with the way things are going lately, it's just par for the course what's going on. So in terms of guide, overall, they're saying for 2024 they should see a 5% increase in capacity, and I believe that this guidance was updated today and increase, and that's another reason that you've seen the stock come up a bit. They said no guidance for 2025, but they're planning for capacity growth in mid to single digits. So that's about the only kind of color that we got on that. I'll just go back to, of course, this, just for a couple more statements here. This stock has been so range bound for so long, and keep in mind, like I said, what do we got here? We've got like 8.3 billion. I know we have about 10 billion in debt, but this stock is still worth the entire company under $7 billion, and they're going to be buying back 10% of that float. So I really hope to see that maybe it starts getting some love that it deserves, and we see it between the 30 and 40 range is what I figure it should be worth relatively soon. But I mean, the stock has kind of just floundered and done really nothing for the longest period of time. But I'd love to know what you guys think. Do you think going forward we're going to see stock actually finally show us a little bit of love here? Are you a shareholder? What are you doing with your shares? I'd love to know what you think about the quarter, guys. Leave a comment down below. Don't forget to like, and I'll see you in the next one.